Now let's give a brief overview of the information collected in the HMDA loan application register. Although this is not an all-inclusive list, it will provide a good overview of the data collected within the required form. Let's begin with loan information located in Appendix A to Part 1003. For each application or loan, institutions are required to identify the purpose, whether a home purchase, home improvement, or refinancing. They're also required to identify the lien status and whether the property relating to the loan or loan application is to be owner-occupied as a principal dwelling. As defined by Regulation C, a home purchase loan is a loan secured by a dwelling and made for the purpose of purchasing that or another dwelling. In addition, HMDA requires financial institutions to identify the following general loan types: conventional, FHA insured, VA guaranteed, and Farm Service Agency and Rural Housing Services guaranteed. Institutions must report the property type as a 1 to 4 family dwelling, multifamily dwelling, or manufactured housing. The amount of the loan or loan application, application date, action date, and the type of action taken must also be reported. Additionally, certain geographic location information must be reported by financial institutions for loans on and applications for properties in any metropolitan statistical area where the institution has a home or branch office. This geographic data is optional for loans on properties located outside these MSAs or outside any MSA, except in the case of large financial institutions subject to additional data reporting requirements under the Community Reinvestment Act. The geographic information consists of the MSA or Metropolitan District Number, state and county codes, and the census tract number of the property to which the loan or loan application relates. Large institutions subject to both the CRA and HMDA must collect and report geographic information for all loans and applications, whether located in an MSA or not just for loans and applications relating to property in MSAs where the institution has a home or branch office. In addition, institutions must report data regarding the ethnicity, race, sex, and annual income of applicants for applications and originated loans. Reporting these data is optional for purchase loans. Information regarding the ethnicity, race, and the sex of the borrower or applicant must be requested by the lender, including for applications made entirely by telephone, mail, or internet. Furthermore, each year, institutions are required by Reg C, which implements HMDA, to report to the public its loan activity in higher-priced loans. Under the rule, lenders compare the APR, as applicable under Regulation Z, on the loan to a survey-based estimate of APRs currently offered on prime mortgage loans of a comparable type. Lenders then report the spread if the spread is equal to or greater than 1.5 percentage points for a first lien loan or 3.5 percentage points for a subordinate lien loan. The price reporting rule uses a survey-based estimate of market APRs for the lowest risk prime mortgages, referred to as the average prime offer rate for comparable types of transactions. To determine whether the rate spread meets the threshold, lenders must use the average prime offer rate in effect for the type of transaction as of the date the interest rate was set, and use the APR for the loan as calculated and disclosed to the consumer under Regulation Z. Lenders must also report whether the loan is subject to the Home Ownership and Equity Protection Act as implemented in Regulation Z. A loan becomes subject to HOPA when the APR or the points and fees on the loan exceed the HOPA triggers. Lenders must also report the lien status of the loan or application, whether a first lien, subordinate lien, or not secured by a lien on a dwelling. Finally, financial institutions supervised by the Federal Reserve or Federal Deposit Insurance Corporation may, at their option, report the reasons for denying a loan application. Financial institutions regulated by the Office of the Comptroller of Currency and the Office of Thrift Supervision, including subsidiaries of national banks and savings associations, are required to provide reasons for denials. Credit unions, regulated by the National Credit Union Association, are also required to provide reasons for denial. Institutions may also choose to report certain requests for pre-approval that are approved by the institution, but not accepted by the applicant in home equity lines of credit made in whole or in part for the purpose of home improvement or home purchase.